All right. Welcome everyone to the Thursday Elite Zoom training. Um, Today I wanted to go over Corebridge product, Corebridge Guaranteed Issue Whole Life. So we just had in our base shop, I think we had like 5 or 6 clients needed to go with the Corebridge Guaranteed Issue Whole Life because they currently have cancer or they have some kind of an illness that makes them uninsurable with other products. Okay. So since there's a lot more senior clients who are living longer than ever, I think this product is great to review. First of all, Corebridge used to be AIG. So it used to be AIG, but now it was bought out by a company called Corebridge. So now they're changing all the names to Corebridge. And let me go ahead and show you. To get more details about the product, you can always go to your homepage, hq.quility.com. And on the left side, under Sales Tools, there's an option called Carriers and Products. Click on that. And you go to Carriers, Explore Now. And there's Corebridge. I'm going to go ahead and click on the info. And when you scroll down, it says available products for Corebridge. Permanent life insurance, guaranteed issue whole life, and a simplified issue whole life. We don't really use simplified issue whole life for a couple of reasons. One, the price compared to some of the other products we have, it's not as competitive. Number two, the commission is not as good for the agents either. So it's not really good for the clients, it's not really good for the agents. I would say it's kind of like that program. If the client might not qualify for all the other companies, maybe you go with that. But we stick with the guaranteed issue whole life product only with Corebridge. Okay. Guaranteed issue whole life. Let me go ahead and show you this. Here you go. This is the brochure for the guaranteed issue whole life. A simple 15-minute option for senior clients. Okay. When you scroll down, how senior clients can benefit from guaranteed issue whole life. Right? Older clients can be especially sensitive about burdening their loved ones with after-death expenses, such as funeral expense, unpaid medical bills, credit card, and loan balances, or household expenses. And best of all, acceptance is guaranteed. And that's why it's called guaranteed issue whole life. So if a client, as long as they're breathing and they're alive, even if they are on their deathbed, we can still get them this guaranteed issue whole life policy. Then you're going to ask me, why is that insurance company will cover somebody that might be dying in the next 6 months, 12 months, 24 months? Because this is considered a graded product and you have 2 years. Once you get the application approved, you have 2 years that you have to survive to get the full death benefit that they promised. If the client dies within the first 2 years, Corebridge will return all the client's money to the beneficiary plus 10% interest on top of that back to the family. So what it means is that if a client has cancer right now and you get them a guaranteed issue whole life, the client passed away after 1 year, it's still within the 2 years, right? Then family will get, let's just say that amount was $2,000 that the client paid into this policy. Then that $2,000 plus 10% of 2,000 is 200. So $2,200 will be returned to the family. So for the client, to me, this is a win-win program for the clients who cannot get insured anywhere else, because if you leave $2,000 in a checking account or a savings account, what is the interest rate anyways? Right? 0.04%, high yield savings account, maybe 4%. But we're telling the client whatever they put in, we'll give that back to the family plus 10% interest if you die in the first 2 years. So there's not really a big risk factor coming from the client's perspective. For the insurance company, it actually minimizes the risk because they wait for the client to survive the 2 years and then give them a full coverage. Okay. What are some of the highlighted features of this plan? Guaranteed issue permanent protection for your clients. First, it has no health questions to answer whatsoever. So as long as, like I said, between age 50 and 80, if the client is breathing and alive, you can get this. But if a client already has a policy with them and the coverage is only up to 25,000 all combined, so if a client already got a $15,000 Corebridge guaranteed issue whole life policy, you can only get the difference of the max and what they currently have. 25,000 is the max, 15,000 is what the client already has, then you can only apply for $10,000. But typically, from based on what I remember, they need to have the policy for at least 1 year until they can add more coverage. Okay, so if a client signed up more than 1 year ago for a guaranteed issue whole life, then you have to wait until after 1 year for you to add more coverage for the client up to that 25,000 combined total coverage amount. And required premium payments stop at or before age 90. So this is a nice feature. The client, as they pay the premium, we thought that he was going to only live up to 4 years due to the complication of his health. But blessed with, miraculous healing, he lived up to 892, right? We thought he was going to die by 80, 84, but let's just say he lived up to 90. Then the client was keep paying money into this on a monthly basis, but the premium can never exceed age 90. What it means is that if they pay up to 90 or they give you that age that the payment can stop, that means the whole life policy is already paid up. There's no more payment after that. And the Corebridge tells you what age you can stop paying the premium and it's fully paid up and you're still covered for the rest of your life. Okay. That's some of the features of it. And application-wise, it's super simple since there's no health questions. I would say you can take 10 minutes to do this. Maybe newer agents, 15 to 20 minutes, but very straightforward and easy to do. And this is something really cool too. Because it's a graded product, a lot of the people think, oh, there's no living benefits at all. But actually, if the client survives the first 2 years, the waiting period, they actually get living benefits on this. Not all of them, but some of them. So innovative client benefits included. At no additional charge, guaranteed issue whole life includes innovative features that allow clients to accelerate a portion of their death benefits if they suffer a qualifying illness. In other words, it's life insurance they can use while they are still living. That's why we call it living benefits. First one is chronic illness. Benefit payment for chronic illness rider limited to the total premiums paid for the policy up to 25% of the policy's death benefit. So that's the 25% of, let's just say 20,000, then that'll be about what, $5,000 that they can take out in case of a chronic illness. Terminal illness, timely product feature pay 50% of the applicable death benefit in the year accelerated. So this means that client will be able to get up to 50%. If it was a 20,000, then that means about $10,000 that they can accelerate. And when the client passes away after a few years, then the rest of the money goes to the family. This is a feature that can be used or client doesn't have to use this. This is just a benefit that they can tap into if they need it. Okay. And in both cases, clients can use the benefit to help pay medical bills, supplemental income, or for any other purpose. Remaining death benefit will be paid to beneficiaries at death. And what I like about this is everything is online. And because there's no getting declined, as long as client doesn't have this policy yet, and if the client is between 50 and 80, we can get them approved. but minimum they do need to have a social security to qualify for this product. Okay. And this is something that I want you to know. Okay. You're like, wow, this is a great product. Now it is, especially for clients who cannot be insured, but there's a couple things that you need to remember. One, if the client dies in the first year, you get 100% chargeback. And that's why I wanted to tell you this so you're not surprised by it. Because the insurance company has to pay back all the money plus 10% interest. The chargeback is 100% on year one. So up to 12 months. If the client dies in 12 months, then you got to give all your commission back. Year two, if the client passes away, you have to give back 50% of your commission back. But after the 2 years, there's no chargebacks, even if the client passes away. So that I would say is the only catch in this product. Okay. And some of the other things to remember is that, do you know like other products you can have other owner who is not an insured, but in this product, insured has to be the owner. So whoever you're insuring has to be the owner. And then payer can be different from the insured. So let's just say there is a husband who has dementia and he's 79 years old, and we got an insurance for him, and the wife is the one paying for it. Then the husband would be the insured, the owner, but the wife can be the payer. Okay? And social security number is required, and they cannot get more than 25,000, and that is the combined total coverage that client can get. And also another thing that you have to remember, no replacement or conversion into this. So if the client already has a whole life policy or a term policy, you're not going to write this product and say this is going to replace that. Why? This is not an immediate coverage plan. It's a 2-year waiting period plan. So if you cancel another other product for the client and apply for this one, then the client has to wait 2 years before they get a full death benefit. So it will not be doing a favor for the client. Okay, just so that you know. Graded death benefit. So first and second year, up to 24 months, 110% of the client's premium that they paid in, if they pass away, it goes to the beneficiary. So you don't lose. Your children will not lose. Your spouse will not lose. They will get a 10% interest on top of what you paid in, and banks don't pay that. To me, that's a huge value. And once the client survives the 2 years, then they can actually get a full face amount of what they applied for. Okay? Accidental death benefit, this is something also that you should be aware of. Do you know, like natural cause death, there's a waiting period of 2 years? But accidental death, it starts from day one. So if the client got this policy and died of an accident after 1 week, it's okay. They will pay up to the full death benefit because he died of an accident, and that's nothing to do with the health. Okay, so if it's an accidental related death, like a car accident, slip and fall, then this will actually pay the full face amount from day one and not just the money back with 10% interest. And in the event of a suicide, premiums are refunded to the family. And that's it. Okay? And the products are not approved for sale in New York, okay, and Maine. And in California, they don't have the terminal illness ABR, and chronic illness is not available in California and DC, it seems like. Okay? So that is the minimum. Let's open up for some questions, and then I'm gonna show you something. Any
Y-
questions about this product?
Yes, Sean, it's 10% the first year. Is it also 10% the second?
Yeah, yeah, they changed. Before it used to be 20% on the second year, but they changed it to 10% across the board.
All right.
Yeah.
Dawn, can you show us how to get to the quote machine? Because they have a little handy quote machine.
Yeah, yeah. So What you can do is sfgquotes.com is pretty easy to use. You can just have it bookmarked. I would say it's pretty easy to use. And if you go here, there's Corebridge, and you click on that. And I know it says simply now, but once you put the client's information, let me show you, Nevada, male, 65, monthly, and click Get Quote. Then there's Legacy Max products, which we're not looking for. We're only looking at the guaranteed issue whole life, which is the far right column. And if you take a look at it, it will tell you 25,000 coverage is 271, 20,000 is 217, 15,000 is 147, 10,000 is 98, 5,000 is $50 a month. So you can quote it right there. It's not too bad, right?
Good deal.
Yeah. And now, if you don't have any questions, I'm gonna go into something else.
Can I ask a
How
question?
can, yeah, go ahead, Kanye.
So is it possible, like, let's say a client wanted like 12,000 or like 17,000, is it possible to do in between amounts, or it's just those fixed values?
Yeah, I believe that you can do it with $1,000 increments. I think they're just showing you a variety of $5,000 increments here, but I think you can do it $1,000 per $1,000 quoting, and not
Also,
quoting
you
on the
can put in the
application. You can do it.
you can put in the premium, and then it'll give you an odd number.
Yeah, like this. Yeah, like this. So let's just say we're gonna do 14,000 or something. Let's try that. I haven't tried that yet, actually. Yeah, there you go. So it does do that. You can actually just click on this one, Kanye, and instead of all rates, you can change it to enter premium or enter face amount, and you can actually specify the specific face amount to this.
And Sean, I just wrote one of these policies.
Okay, great.
Yeah, and what happened is that the client had already had a $17,000 policy with Corebridge, and she had had
Mm,
it for 2 years. So I had wrote it for 25,000, and they sent
gotcha.
me saying, "Can't do that. It exceeds the amount." So I had to go back
Correct.
and tell her, and she was like, "Okay, I want the 25." So the difference was like 7,000 because it has to be in $1,000 increments. So we
Yes.
reran it, but it does start you off with the simple issue, and then it pivots you into the guaranteed issue
Yeah.
as you're
Yeah,
writing the
correct.
policy.
Yeah, they consider them for the first, right? The regular products, and then based on the it will go to guaranteed issue whole life.
So, Sean, we should only be quoting the far right column, the guaranteed issue, because it's the highest number. And then if they
Yeah,
got a
the
better
reason
number,
why is because of this, right? So let's just say, Kurt, like Americo and Mutual of Omaha final expense products are incredible, right? It's a great price, it's very fast. So that is the go-to for non-graded guaranteed issue whole life policies. So if the client says they have cancer or they had a heart attack just recently, Mutual of Omaha and Americo might not take them because of those illnesses. So we usually come here for guaranteed issue whole life. So I am coming here for guaranteed issue whole life.
so
Okay.
because they show multiple numbers, though, we should only look to the right where it says GIWL.
Yeah, yeah, that's what I do. Yeah. Okay.
All right, I see other numbers, and then it makes your brain want to quote the lowest number, and then you're
Yeah,
like,
yeah.
no,
I
that's
always show the only guaranteed issue whole life because that's the type of health client that I'm quoting for. Clients who have some serious health issues.
yeah. Because if you were going to get one of the other ones, you'd be back in America, so we wouldn't even be here.
Exactly. Yeah,
Thank you.
exactly. Yeah, you're welcome. All right. So something I wanted to share with you is let me go ahead and see if I can do a notebook. No. Let's go ahead and share. Is there a note? Annotate? No, this is not it. I was trying to looking for, I don't know if they still have the, maybe not. Okay. So let me bring up just the word. Okay. So what I wanted to briefly talk about is for seniors who have some serious health issue who cannot get too much coverage. So we have to go with like the guaranteed issue whole life, or maybe some kind of a final expense product, but it's not a lot of coverage, right? So one of the things that I would do, but let's just use a 65 male, non-tobacco. The health issues, let's just say client had a heart attack 2 months ago. Okay. And client had cancer 1 year ago, and has COPD. Let's just say this is the client's current health. This is pretty uninsurable right now. But you want to build more value for clients who are looking for mortgage protection or general life insurance presentation. And at this point, what I would do is I want to do a blended plan and combine two products together to give clients the best deal. So as an example, we talked about AIG or Corebridge, we call them now, guaranteed issue whole life, right? And what I would do is I would add an accidental policy such as Mutual of Omaha, Guaranteed Advantage, or GA, I'm going to just put it, Guaranteed Advantage. And why would I do that? Is because the Corebridge guaranteed issue whole life, it will cover if the client dies of a natural cause and accidental death. But the coverage is limited, right? It's only up to 25,000. So what I would do is I'll go ahead and show a client a Corebridge plus accidental death that is affordable. Accidental death policies do not have any health questions. So that's a really awesome product to add, especially if a client has some serious health issues, okay? So let's do this and I'll show you an example. Let's go ahead and do the 25,000. And it was what? $271, right? So we're gonna put 25,000, and this is the Corebridge, right? Plus, which is $271 or so a month. Plus, and let's go look at the accidental policy. You can go back to the sfgquotes.com, go to MOO, and then we're gonna go to Guaranteed Advantage. This is AD, you see it's both capitalized, it stands for accidental death. So this is the accidental policy. And we're gonna put Nevada, 65 years old, male. And let's just say as an example, we're gonna do a $200,000 accidental policy. It's $43, right? Then you can go back here and $200,000 accidental AD from Moo is how much? It's 43, right? So we're gonna put $43 a month. So what does that mean? If the client dies of a natural cause, the family will get $25,000. If the client dies of an accident, it'll pay $25,000 for accidental death from Corebridge and $200,000 accidental death from Mutual of Omaha. So it will pay $225,000 if the client dies of an accident, right? So the way I would write it as an example is, let's just say his name is John, 65 male, and we're creating some options here. And I would put $25,000 $200,000, and I'll put a plus sign here and 225K AD. And this is kind of like how I do it. That way it's visually easy to understand. Is how much? If we add these two, 271 and 43. So that is 314, right? $314. Okay. So combined, it would be $314 a month. Do this again. Okay, there you go. So this will be considered option one. The client dies of a natural cause, $25,000. If the client dies of an accident, it pays total of $225,000, and that's $314 a month. And what would the option two be? Something that is a little more affordable. So what I would do is I'll go back to the Corebridge and I will change it to all rates so we can see everything. Here we go. 20,000 is 217. So I can go back. So 217. And that's for 20,000. And then what we can do is if you wanted to keep the accidental, you can keep the same if you wanted to. And that was $43, right? So we can go back and put that if the client dies of an accident, you'll pay $20,000 plus the 200,000. So that would be $220,000 if the client dies of an accident. So that would be, let's go ahead and do the math here. 217 plus 43, right? So that would be $260 a month. So then there's your second option. This is the natural from Corebridge. This is the client's accidental death total payout if the client dies of an accident. And option three, what I would do is something that is a little more budget friendly. Third one, I tend to want to give them around $100, $150. So I might actually lower the coverage to 10,000 one. 10,000 is $98, right? So if we do the $98, what is $98 plus 43? That is $141, right? So what I would do is I'm gonna put 10,000 if the client dies of a natural cause. If the client dies of an accidental death, they'll pay $210,000. And that is AD, yeah. So I'm just trying to show you the format I'm just using. And you can use whatever format you want to use. But I just wanted to visually show you for John, who has a heart attack 2 months ago, cancer a year ago, COPD, there's not many companies that will even insure him. So if we need to go to a guaranteed issue whole life, we give them the guaranteed issue whole life amount with Corebridge. And then you add an accidental from Moo, Foresters, or Americo. Americo one is good if you don't have health insurance license. You can still sell the accidental plan with Americo under the ADB, under term. Or if you have a health license, Mutual of Omaha one is very good priced. 200,000 accidental, and you add the coverage so that it's easier to read. And when you're going over with a client, you'll say, hey, John, based on the health information that you provided to me, this will be the best program. So the option one means that if you were to die of a natural cause death, you had an illness, if you had another heart attack, or if you had cancer, things like that, and you passed away, your family will get $25,000 in total coverage. If you die of an accident, we'll pay out $225,000 for your family, and that program is $314 a month. Option two, if you die of a natural cause, it's $20,000 payout. If you died of an accident, it pays out $220,000 to your family, and that's $260 a month. And the last option is $10,000 if you died of a natural cause. If you died of an accident, it's $210,000 that your family will get, and that's $141. Okay. And here, this is something that you need to mention, right? This plan is a guaranteed issue whole life policy. So if you died in the first 2 years, we will actually give you all your money back to your beneficiary plus 10% interest. And that's because you recently had a heart attack and cancer, and they want to make sure that they can see you that you can survive 2 years. Do you think you can do that, John? And I just say, do you think you can survive 2 years? They usually say, yeah, absolutely. Yeah, so if you survive the 2 years, John, this full coverage will go ahead and start. But if you died in the first 2 years, then you get the money back and plus 10% for your family. But remember, what bank do you use? A Bank of America. And what is the interest rate they give you? 1%? This is giving you 10% back to your family. So if, God forbid you died in the first 2 years, your family still gets more money than what you put in. But if you survive the 2 years, which we're hoping for, you'll be able to get the full coverage. Okay? And just to let you know, I'm a brokerage. I represent the top 50 companies in the United States. So if you survived the cancer for more than 3 years, and if your heart attack was more than 2 years, then we can go ahead and revisit this and do an annual policy review, and I might be able to give you a more coverage for a better price in the future. How does that sound? Okay. And another feature that I want you to mention, and this is a whole life policy. So once you get this policy, it's for the rest of your life, no matter how long you live. And number two, this has cash value as well. So every time you make your monthly payment, it builds cash value over time that you can later access tax-free also. And third one is this comes with something called the living benefits. If you had, let's just say terminal cancer diagnosed, knock on wood, hopefully it doesn't happen to you, but if you were diagnosed with terminal cancer, or if you're in a long-term care situation where you can't do 2 out of 6 activities of daily living, after the 2 years of getting this policy, you'll be able to get a portion of the death benefit while you're alive. And it's unheard of in a guaranteed issue whole life policy to have those things. So this is an incredible benefit, and you can use it if you wanted to. So you can use it while you're alive if you were to be in a terminal or chronic illness situation. And then the rest of the death benefit will be paid out to your family once you pass away. So which option would you like to see if you can qualify today? That's it. And I'm just quiet. That's how I would end the presentation. And now, client, if there's a kind of like a pause and a silence, it's okay. That's good. And then client's thinking now, which one do I like the most? The option 1, 2, and 3, if you look at the price point, I strategically did this. So one is about $300 a month. The second one is about $250, and the third one is about $150 or less, between $100 and $150. Most of the time, clients will go option 2 or option 3, statistically. So I don't show the option 3 too low because a couple reasons. One, if it's too low, then the coverage is not going to do much for the family, right? So we want to make sure that this is going to make a difference for the family. So option 3, I usually have it right under $100 a month or anywhere between $100 and $150. Since this is a client who is a senior who has already a lot of health issue, the price point goes up anyways. It's a little more expensive. Then I'm going to show them about $150 or lower premium. Okay. And once you ask the question, which one would you like to see if you can qualify? You already know as an agent in your mind that this client is going to be approved. But this is just the psychological thing where if you say, oh, this is a guaranteed to be approved, clients don't want what they or can already have. They want something what they can have, and they want to know if they can qualify. That urge to find out, the desire to find out, and that's what the sales process is about. Okay, so this is good three options that I'll show, and it just builds more value because if you look at it, if you just offer a $25,000 guaranteed issue whole life for 271, it seems like, wow, that's a small amount of coverage for a big premium. But by adding the accidental policy, you're just giving them bigger value, bigger coverage. And this is something that you should remember. Accidental death is the fourth leading cause of death in the United States. And seniors, they slip and fall, they get into car accident and they pass away. So there's a lot of things that could contribute to death other than heart attack, stroke, cancer, and all these other illnesses. So you're giving the client more coverage, more value for the money that they're paying. Okay. And visually, just more appealing. All right. Any questions?
Sean,
Okay.
question.
Yes.
Up to what age this product can be qualified? 85, 86 years old?
This is actually only up to 80, Bernadette.
80. Okay, thank you.
This one particular one is 80. It used to be 85, but I think too many clients passed away, so I think they lowered it to 80. So this is between age 50 and 80, and as long as they're breathing and alive, you can get them this policy. All right, that was a good question. Anything else?
That's all.
Any
Hey,
other
Sean.
questions?
Sean,
Yeah.
I have a question for you.
Yeah.
I was supposed to have an appointment with this client before he had a recent slip and fall at Costco. Okay.
Yeah.
If he still wants to get the policy, accidental policy, as
Yeah.
long as he disclosed that he had a slip and fall at Costco, it's not a severe injury or anything. He's just limping right now with a cane. So can he still be able to get a policy as long as he disclosed that he had a slip and fall
Yeah.
a week ago, right?
Yeah. So as long as client is alive, Jericho, we can get him insured between age 50 and 80.
Yes. Okay. Thank you.
Yeah. Yeah. You're welcome.
John, they could
All right.
literally be in a coma in the hospital and get this
Actually,
insurance.
the only problem is this though, Kurt. If they
They
are
have to
in a
sign
coma, then they can't sign it. So yeah, if they're alive and conscious and they can sign it, then yeah, we can do it. But if the client is in a coma, then yeah, you technically can't do that. Yeah.
I wonder if their power of attorney.
Yeah. I mean, I guess we can try, but yeah, typically they want the client to be able to sign it or verbally consent to
I
it.
guess I was just making the point. Like, it's just like you could literally be on death's door and still get this.
Yeah, no, absolutely right. All right, guys. Hopefully it was a good training. There are clients who got turned down a lot. They get discouraged because they couldn't get a good policy because of their illnesses. And you can take advantage of this type of product. And really, like I said, it's a win-win program. If they pay into a savings account, I know they're not going to get 10%, whatever savings account it is. And then if they survive the 2 years, it becomes a whole life. To me, it's a good product. And I would say this is a good one to actually go ahead and combine it with an accidental death policy if you wanted to. So hopefully this training was helpful to you guys. All right. Have a great rest of your day, and I'll see you next time. Take care.
Thank you so much.
You're welcome. Okay, bye-bye.